I will start by sharing my screen. All right. So yesterday we discussed, the last thing we discussed yesterday was a triple top and triple bottom pattern. So next thing we have on our list is the head and shoulder pattern. And we have two type of head and shoulder pattern. We have the head and shoulder pattern and have the impacted head and shoulder pattern. All right. So they say the as referred to a lower swing height trend reversal, a head and shoulder pattern is formed when price action within an uptrend faces a lower swing height than the previous one. In simple short, let me just draw how a head and shoulder structure used to look like. You used to have the right shoulder and the left shoulder, and also what the head. Now imagine your body, my head, my shoulder, and you have a left shoulder and you have what a right shoulder. And this your shoulders extended what your arms. All right. So let's say the arms are the movement. Your left shoulder is the left shoulder here, while your head is the head of this. So this is how it look like. The right shoulder, the head, which is above the shoulder, the left shoulder, the right shoulder, and what the hand. And this is what the neckline. This is like your neck. No, not probably your neck. Let's say your spine. God, I guess, but this is what we call what the neckline of this what head and shoulder pattern. So head and shoulder pattern simply means there is a high is formed. The second high is above the last high, while the third high is what below the last high. So which means the right shoulder can never be above the head or equal to the head, and the right shoulder can never be above the head or equal to what the head. And the neckline needs to be broken to confirm what the head and what shoulder. So what we expect is after this breakout, a retest will take place while you what make your entry to what so. So in this you will say that the head and shoulder what is a reversal pattern. Like in the definition we said, also refer to a lower swing high trend reversal. And it's always appeared in a what? In an uptrend. So it's where the market has been going up and the head and shoulder formed. That should tell you that a trend reversal is what? Taking place. All right. So in the meantime, let's see more of what we have here. All right. They say the head and shoulder pattern is probable because the sentiment that was formerly producing the uptrend is now possibly shifting, and buying pressure is what's decreasing. So what they are saying is like, for example, let's say there was an FA, a news or released that make the coin to start what growing. Now, when the head and shoulder start forming, it means that that sentiment does that FA will create a bullish sentiment. You understand? So that sentiment that has been making the coin to be growing has started what shifting, and buying pressure is now what reducing. So which means people must have taken advantage of that what news that was released. You understand? Or any fundamentals that was released that made the coin to rapidly grow. So it means that people are taking that advantage, and less people are not taking the advantage because of what the news is kind of what fading out. So by that time, the market will start creating a structure of what a head and shoulder, telling you that like telling you that the buying pressure is decreasing and sellers are what setting in ASAP. All right, so which means definitely use your head and shoulder to identify what when to short the market. And the head and shoulder is confirmed after what the breakout of the what neckline. The neckline is not broken yet, it's never a head and what shoulder. I also say that head and shoulder patterns can be stronger when the price break below the what neckline. This is what I told you. It becomes stronger when the price what break below the neckline, which means if you trade after it break the neckline, you have what high probability of what winning rate. But if you trade before the break line is yet to be broken, you can end up what losing most of the what time because it have not yet been confirmed. That neckline is probably what a support, and you know what a support does to the market? It's sent to what bounce the market off. But if the market was able to break that support, which is actually what the neckline, that means the market is now ready to continue what a downtrend, to start a downtrend. But if it's not broken, it means that the market is still yet to accept bearish. That means more buying pressure is kind of setting in, like that is kind of a battle between the bulls, the buyers and the sellers. So when you get to that support, buyers immediately what set in, try to push that market and not allow it to break. But once it's break, most of the buyers will escape all their buy orders. Like they'll be like, oh, this is not gonna be favorable. They will kind of remove all their buy orders. Why sellers what keep setting in? Because that breakout is kind of what a confirmation that bears at what set in. So this is just how psychologically the market operates. Now look at this. This is an exemplary of how what a pattern should look like. Remember they said it occurs in an uptrend, which means before a head and shoulder will form, there should be what an uptrend movement. Before the first the left shoulder will form, the head will form, and the right will form. Now you can see the market was coming up before the left shoulder formed. It creates another high which is above the left side. That's why we call it our head. Now it bounce back again. At this point, it's created another low, which means probably this is a too low. By this time, you might have drawn your trend line and trying to see what the market is about to do. Now, once the market again now create a third shoulder, this is now when you should start looking at it as a head and shoulder. And by the time this trend line, which is supposed to be bouncing this market up, is broken, which is actually a neckline on a head and shoulder pattern, gets broken, what do you expect? A retest, and you short on this retest. The market can go as far as it can go, but you should measure your TP based on the flag pull. What I call a flag is when this place is formed, it mostly used to be like a very bullish like it's not like mostly up and down. So you can call that a flag pull. All right. So you can measure your flag pull where the flag pull started and draw it like this to determine your TP. So which means as it starts here, we can draw our TP like this and take our profit here. I hope you get it. I hope you guys do you have any question? Do you have any question? I guess no question yet. It's flowing. Now, this is an example of a head and shoulder. If you look at this market, yeah, this is why I told you that you usually used to have a flag pull. And the market instead of being so consolidation growth, it's kind of look more of less consolidation and more stretch forward. And you can see this flag pull. This is what we call flag pull. Then at this flag pull, that was when it created the left shoulder, create the head, and create the right shoulder. This is our neckline. And once it get broken, you can see the retest here. There is a wick that touch the retest. The market goes down. So what that means from this flag pull now, if you should draw your TP, probably your TP hit. Any other thing could happen. We're going to head to our trading view, look for a coin, and try to identify this head and shoulder pattern, and try to know with this way of setting our TP, was this favorable. Now also understand that your TPs too can at least mostly, even most of the time, be your what? Your support. So let's say if there was a serious consolidation, let me show you something. Let me clean this. Hold on. For if it's me, I'm not going to set my TP from this measurement. All right. Looking at here, you see that here can be what? A support. This is where I will draw my own TP. And if you should draw this, you will see, also see you also see what happened here. If you measure it, you see that that was why the market was even reversed. You see that? So for me, if I'm to trade this trade, I'm looking at my supports too, not just by these rules of measurement, measuring this profit. I look at those supports, to select my TPs. Those measurements are my final TP. But most of my TP1, TP2 should be in between those supports that I will find. I hope you don't misunderstand it. All right, let's head to our trading view and try to identify some of these head and shoulder pattern on our chart and see how good it could move. All right, all right, all right. Let's look for this head and shoulder pattern. I think we might be looking at one here already. Let me share something. Maybe. I'm looking at one here. Let's show you this. The left shoulder, the head, which is this. I see it here. The right shoulder, the breakout, the little retest that happened there before what? It moved. Now let me draw my neckline. Ah, what happened? Let me draw it again. The left shoulder, the head, and the right shoulder, the neckline breakout, little retest, and the movement. You can see the neckline here. You can see that's a real what example as we open our BMB. You can see just a TP. Let's check. This is where I can see the flag started. Even if I just started from here as I join it. What do you see? The TP what hit. And if you're not able to take your top profit, you see the market what reverse and what hit your entry point. Now, like I said, this place I mark can only be my final TP. But my TP1s and my TP2 will be what? Based on the support and resistance. For this nation. You cannot make me the host. Any question on the head and shoulder pattern? That's well, I can't see any question here, right? So this was the last video before the network disconnection. Hold on. All right, this was the last video before the network disconnection. It was a perfect. I also show an example where how I will set my TP if I'm to what make these trades. All right. So let's get to the next one we have here. Next thing we have here is the inverted head and shoulder pattern. Now, why did they say it's inverted? It means what? This one is upside. It appears within what a downtrend, and used to know what the beginning of a what uptrend. Now let's see what they write here. Also called the higher swing low trend reversal. An inverted head and shoulder pattern is formed when price action within a downtrend traces a higher swing slash before lows than the previous one. So simply means the left shoulder, the right shoulder, and the what head, which means the shoulders can never be what below what the head. The head is the one that is more below, and the shoulders can never be below what the head. And this is what they are trying to say. The market was going down from the right shoulder, the left shoulder, from the head, from the right shoulder, break the neckline, retest, and what go. This is how what an inverted head and shoulder pattern used to look like. So there must be a left shoulder, there must be the right shoulder, and there must be the what the head. Based on body structure, the head can never be what As in, the head can never, if it's on a head and shoulder pattern, the head can never be, the head will always be above the shoulders. But it's inverted. It's just like when I turn you upside down. If I should turn you upside down and hold your legs above, your head will always be what? Below. While your shoulders will always be what? Above. So that's something that is here. Inverted. When you turn the head and shoulder pattern what? Upside down. All right. The other said the inverted head and shoulder pattern can be formed because the sentiment that was formerly producing a downtrend is now possibly shifting and selling pressure is what? Decreasing. So this is, for example, let's say when there is a fault in the market where everybody started selling. And at the time, the fault was corrected. That means that sentiment that started pushing that market down as was started shifting. And those selling pressure, the number of people that are selling has now what reduced. Why buyers start what set in. The other head and shoulder pattern can be stronger when the price break above the neckline. Simple and short. When the neckline is broken, it became what stronger. Just like when the resistance is broken, a new support is what formed. So when the retest occur, it will support that market and start what kicking up. Which is trend line connecting the swing pivot size that created the inverse shoulders. This is an example of what they are talking about. You can see our left shoulder, our right shoulder, our head, and our right shoulder break out, retest, and what movement. Connecting those sides to create what? Our trend line, our neckline. And you need to buy what? At this what? Retest. After the neckline is what? Broken. If you decide to buy here, you can end up what? Continue going down because it can be another structure. So it's when that left shoulder is fully formed, right shoulder is fully formed, break out and a retest. And you can what? Make good what? Entry. So it's better that you don't trade than trade a trade that you know that you has high probability of what? Losing money. It's better you even miss opportunity than risking to what? Lose money. You get that? All right. Also, they say that traders will often seek out opportunities to buy when confirmation in the form of neckline break occurs. You see that buyers what will actually look for buying opportunities when confirmation in form of what neckline break. So when that neckline is broken, they give you a solid confirmation that what is time to what buy. You see that? So they say that a neckline break for an inverted head and shoulder pattern is the failure of the resistance area drawn from the previous swing highs on the chart. They're talking about this, the break of the previous the fail the failure of the resistance. You know, this line here is what the resistance. So the failure of the resistance area drawn. So when the resistance failed to resist the market, it resisted here, but failed to what resist here. So the failure is what you call what the neckline break. You can also see a real life inverted head and shoulder. The left shoulder, the head, and what the right shoulder break out with test and what movement. So inverted head and shoulder pattern are what trend the reversal pattern and not a continuation pattern. It's a trend reversal what pattern. All right, let's look into our chart and look for examples to use. Let's see if we can find one on PMB. I already found one already. It's very simple. When you master these patterns, when you see them in the chart, you will quick to identify them. But if you don't master them, you will find it hard seeing them on the chart. You will be seeing a pattern looking at you there, but you find it hard to what identify it, or even know that there is a pattern there. Well, once you master this pattern, once you look at your chart, boom, you will see it. Now look at the head and shoulder pattern that we identified already. Just so quick. The left shoulder bounce back here, pretty high. The head, the right shoulder, and what? Boom. And connecting our trend line to create the neckline. What do you see there? The neckline join. And once broken, it start was flying up. So like I said, most times when the support is broken or the stand is broken, they might end up not making a retest. Retest is not 100% assured. But when a retest occur at the market or the trend line that was broken tend to resist or support that market, it means that what it is confirmed. So most times what break this neckline might be so strong that it might not allow it to what retrace. So this is an example of what inverted head and shoulder. Let me see if I can find another one that has a retest. If you don't find, we'll move on. Now look at this. This is why they say you should always wait for what the neckline break. If you look at here now, you can see that an inverted head and shoulder was forming, but the neckline was not what broken. And if you have traded it like this, you might end up what losing your money. That's why you always say that you need that neckline to what get broken to call it what a confirmation. Now, if you look at there is a left shoulder here. Sorry, I made a mistake already. And I shoulder here, head here, and what? Sorry, I made a mistake. Left shoulder, head, right shoulder, and we couldn't what break it. And they keep what persisting that market, keep persisting, and kept what resisting. You see, so most times if you have entered here with that break, the market was going down. By this time, you must have what stop yourself up. You might left the market, or you must have hit your SL. You understand? But when you wait for that break to occur, that's when the market what tends to what move up. Any question on head and shoulder? Any question on head and shoulder? All right, no question. That's what we have here again. You have the pennant pattern. Apparently, I would say not too much on pennant pattern. Yeah, it's more of a symmetrical triangle. Most times, I even find it hard to identify the difference. Well, let's read what the pennant pattern is all about. They say the pennants closely look like this symmetrical triangle, but its characteristics are not the same. The pennant has the shape of a wedge of consolidation. It usually appears after a sudden upward or downward movement. The life of a pennant is short according to each time frame used. The pennant is a continuation pattern. This side of the side of exit of a pennant depend on the movement that precedes it. The information on the pennant can interfere a bullish or bearish was trend. Most often they break or occur halfway. So all this theory they are talking here, a pennant pattern actually look like like a symmetrical triangle. Most times you will see that you still call it a symmetrical triangle. They look more is exactly the same. But based on the characteristics here, they say that the life of a pennant pattern is what short and usually occur after a sudden movement. Let's say there is a pump in the market, a pump that just happened, a sudden movement, and the market wants to consolidate. They say that that's the kind of place where what a pennant pattern used to form, and its life is short. That means the life before the breakout is what short, which means that we know much consolidation on a pennant pattern before what the breakout. So when they say it closely looks like a symmetrical triangle, it means that they look like this, just like your what symmetrical triangle, and they say it's a continuation pattern. So which means if we see a bearish pennant, whenever the market is bearish, you should be able to see what a bearish pennant. Whenever the market is bullish, you should be able to see what a bullish pattern, because they say it's a what a continuation pattern. So when the market is going up, it will just flash up, boom, and it's now what start with the life is short, but you know it, the breakout what has happened. Most times it might not even have a retest. It what post out. All right, look at this. The target calculation is compared to the previous trend. We calculate the height of the whole movement up and down prior to the information of the pennant and the extended, and then extended that high as the last low. So what they mean is that long candle or long movement you see, they measure the movement and expected it to do what double of that movement, like expected to make what is that height of that what movement from the breakout, just like they illustrated here. This is a bullish pennant and this is what the bearish what pennant. You can see both of them are what continuation pattern. And this is what they expect. When the market do a long movement, boom, the life is short. You can see that the consolidation is not like up, down, up, down. It's just very short. What if it's a symmetrical triangle? That must be at least two lows and two highs. But this pennant, there must not, as there might not even be two lows and two highs. You understand? There might be two lows and one high. There might be one low and two highs. So the life is short. The consolidation life is what short compared to what the symmetrical pattern. That's more of their difference. And it's another difference is that it's occur when there's a long movement, as in a fast movement in the market, it tends to consolidate more. The breakout to also what create another fast movement to which is exhausted. All right. These are an example of what they are trying to say. A real life example. Like they say, the life of the pennant is what short. If you look at here, there was a quick movement in the market. Sorry. A quick movement in the market before it changed to retrace. No much retracement, boom, it has already broken out retest. And they measure the movement of that long movement, starting from here to where it was create the first as in the high, in which you connect the pennant, measure it in a vertical way and move it from your breakout and extend it to determine your what CP. This is also an example of the bearish what pattern. You can see there was a quick movement in the market here before the pattern starts forming. See, just two highs before they break out. So most times, it quite look like a symmetrical triangle, but if they still represent the same trend, whichever one you just trade, select your TPs and leave the market. You mustn't get all the what profit. Take some profit that you can get and leave the market. All right, let's see if we can identify any of these pennant patterns on our chart. That would be difficult to differentiate them from the symmetrical triangle, but let's see if we can. Okay. I think the 4 hour cycle. Sorry. All right. Let me see if I actually identified one here. I actually identified one. I think I did. Yeah, this is an example of a pennant pattern. Now, like I say, if you want to calculate based on the way they say you should calculate the TP, you have to start from here. You have to start from here. But like I always say, tell a profit you can check and leave at the market. So this is where the pennant pattern formed. You can see the breakout, they will test and what boom. But as you can see, we're not able to make up to that what movement before the market what reverse. But at least we could be able to what skew some profit before it could what the case. You can see if you have not collected your profit, move your stop loss to entry, you might end up what losing all this here. All right, let's see if we can find another one. Multi-level. All right, we are here to find the perfect one, but this alone should be able to solve the problem. All right, any question on the pennant pattern? Any question on the pennant pattern? Any question on the pennant pattern? All right, seems you guys are copying now. We don't have much time. The class might be ending now. Let me see what we have left. Still have the channel pattern. Oh, we just have one more left. And today is Friday. All right. This is where we're going to draw conclusion on our class for tonight. Tomorrow we're going to finish our channel pattern. Tomorrow being Saturday. We finish our channel patterns. It'll be a quick one. And again, we will discuss on risk management. Very, very important. It should have been what I would have done after teaching about the future platform, but it's kept in my mind because the technical analysis was what people were actually waiting for. So I jumped into it. But normally, from the past lectures, I used to talk on risk management before I start the technical analysis. But since we are done, almost done, on my own part, not actually for the whole technical analysis. And then about the price action and support and resistance I just taught you guys. We will conclude on it by tomorrow. And same tomorrow, we will discuss seriously. Please never you miss this class. I'm going to teach you something that for someone to give you that kind of information, you have to pay a wholesome amount of money. Like it's kind of if I give you it's kind of asking someone to give you a financial advice. A financial advisor cannot give you a financial advice for free. But this is a free class. Like this management is free. I'm not saying that you guys are going to pay for another money. That's not what I'm trying to say. What I'm trying to say is that the class is very important, that you must not miss it. All right, that's the whole point of the deal. So make sure that you attend it and come with your pen and book. All right, come with your pen and book, so you write this down and it will guide you on how you manage your assets. I can tell you that if you don't follow those rules, seriously, even if you are an expert and you don't apply risk management, you will end up blowing your account. You end up losing your money. Seriously. If you don't apply the risk management, you might be winning by being aggressive in the market. You might be winning, thinking you're winning big. You understand? You want to be winning big. It's just a single mistake for you to lose everything. But if you use the risk management, a single mistake will not even look like a setback because you manage your risk. I will give you the proper deal on how you can do that. And you will try as much as possible to learn it and apply it. You understand? Learn it and apply it. Learning is very easy. Applying is very difficult. Most times, when you apply it, you will think you're not earning much, or others are earning more than you. It's better that you earn little and lose nothing, or lose little, than earn big and lose everything. You see that? So there's a difference between you earn little, you lose little, than you earn big and lose everything. That was a very total big different thing. So the class is very important, and that's why I'm emphasizing on it. Make sure you don't miss the class tomorrow. So tomorrow will be a day I might be rounding up my own class. Me personally, Chidera, and other of my colleagues will take part on their own field. So the next colleague that will be coming in will be teaching you guys candlesticks. He will also talk more about market structure too. Uh, some of the indicators that you can also use. You try to give you more helps that you can add with other technical tools in order to have more winning trade. You have learned support and resistance. You have learned price action. I think the former teacher, I don't know whether he teach you candlestick, but this teacher is coming in after me. We also talk on candlestick too. Emphasize on it. You guys read that book. That book I gave you guys. Most of you might not be reading it. Please read it. I gave you guys the major three topics to read: support and resistance, candlestick, and price action patterns. On that book, I personally said. That book I personally said. And if you also want to do forest, that book has everything you need to know about forest. Because that's actually a forest book. But it has a very detailed technical analysis study. So that's why I use the book to teach. So don't just, if you want to focus on crypto alone, don't go and be reading everything. You might get your head complicated. You might compound, make your head feel saturated. So just focus on support and resistance, candlestick, and price action patterns. So since the next teacher that is coming is going to talk on candlestick too, then you should read the candlestick ahead of time. So that when the teacher now starts teaching, you will find it more easier to understand and flow with the study. All right, guys, this is where I'm going to draw my line for the class tonight. You guys do have a blessed night. Thank you.
Thanks to you.